What's up, Zach's Live Trader subscribers? Here with you always, Dave Bartosiak, the bearded boy wonder, following up on a bunch of these options trades that we put on over the course of the last week. Now, during last week's video, I know I covered a ton of these because we had the holiday in between. I wanted to make sure we were catching up, so I covered a lot of ground last week. So this week is obviously a little bit more limited as we've only had 3 of these reports that we've been looking out for, and one of those bad boys hasn't even reported yet because today's Thursday, and Broadcom, not to be confused with Avago or Brocade, even though it is AVGO, they're going to be reporting after the bell today. So I want to make sure that I got the rest of these out before then, and then next week we'll look into that. So there you go. Again, guys, I am still looking for candidates for these reports next week. So what am I going to do a video on? I need some of your suggestions so I can come up with a game plan for next week. So as always, shoot me those emails, livetrader@zax.com, and let me know which earnings reports you guys are most looking forward to. And then I will aggregate them and try and find some gems in there by popular demand, see which ones we'll do next week. Okay, so let's get into the nitty gritty. The first stock I'm going to talk about here is Ambarella. Now, we already talked about Ambarella last week, but I just wanted to circle back here to make sure, just in case you missed that video or whatever, we put on a bull call spread on Ambarella. It was long the January 20th 60-65 call spread for a $2.30 net debit. Now, this one, we get a max profit with AMBA above $65. So AMBA shares are not cooperating with us right now, but it's not terrible. It's not terrible, though. The trade's at $1.10. Last week, the trade was at $1. So it is starting to look a little bit better, but still, you know, if we haven't already covered, I suggest we just go ahead and cover. You take the hit, that's what happens. Don't make it a 100% loss. If it's a 50% loss, yes, that's terrible, but listen, if you have a 50% loss every once in a while, but you counter that with a 100% gain, it's going to be all good over the long run. I mean, fantastic over the long run, right? But how are you going to get a 100% gain? So there's this company called Luluemon where we put on a bullish call spread along the Jan 20 57.50 62.50 call spread for a net debit of $2.06. This one you get max profit with Lulu above 62.50. Lulu killed it. The stock got up to 70 today. Very nice. And the spread right now is at $4.30. So this is the thing with these spreads. You could stick around, and as long as Lulu stays above 62.50, eventually this spread is going to make its way to $5. So that's basically 70 extra cents. Now think about this, all right? 70 cents is what we can get. But it's not on your original $2 anymore, right? Because you've already got, essentially, you could cash in today, you get $4.30. So you got to think, do you want to wait and have 5 weeks worth of risk on Lululemon to gain 70 cents on a $4.30 investment? No. Just cash in, baby. Plus 100%. It's a good trade. It's a solid trade. Cash in, on to the next one. Fantastic stuff out of Lululemon, more than made up for any loss that you might have seen on Ambarella. So that is great. Now, there's more. Sears. Put on a bear call spread on Sears. Now, this is where it gets real interesting. I love it. So I gave you 2 trades to take a look at. Both the December 16th expiration, which is a week from tomorrow. The 13-14 call spread, I said if you could get it 25 cents net credit, that'd be good. Or the 14-15 has a higher likelihood of success for 18-cent net credit. So both pretty solid trades. And, you know, if you want to be more conservative, the 14-15 was the way to go. If you want to be a little bit more aggressive, the 13-14 was the way to go. And I was pretty bearish on Sears. Basically, we cash in here on the max profit as long as Sears is below $13 on that more aggressive trade or $14 for the less aggressive trade. Now, Sears is up big after earnings, but this is the fun part. It's up 4%. So the stock's at like $12.50, $12.60, which last time I checked was below $13 and is also below $14. So what's happening here is the spread On the more aggressive one, it's trading at 20 cents, and on the less aggressive one, is trading at 14. Now, at the surface, that doesn't look like a spectacular victory right now. But look, you're talking 5 cents on 25 cents, right? Decent. And a 4-cent trade on 18 cents. So that's how you got to look at this, right? But either way, we're making money. So what I suggest you do is just wait it out. Is Sears going to get that much better? No, just wait. Just wait. Time is on your side, and it's only a week from tomorrow. So you got a market that's been rallying like crazy. They didn't punish Sears today, but they didn't take it up as much as the options market is priced in. Because remember, the option market was priced in something like a 15% move in either direction. Certainly did not happen here with shares of Sears. So I just say you wait, see what happens. Time is on your side when you're selling option premium, folks, and that's what's happening here with Sears. Now, I did not touch on Broadcom, again, because they're going to be reporting after the bell today. I'll make sure we get that next week. And next week's going to be a big one because we've got several of these expiring. So I'm going to make sure you get it on Thursday in plenty of time for Friday's trading day. But we're still going to need to get some answers from you guys on what reports you guys want me to cover and what trades you want me to try and find for you. So again, shoot me those emails, livetrader@zacks.com. And I'm going to have a fantastic weekend. I hope you all do as well. And we'll be back at it on Monday. Have a great weekend, everybody. I'll see you.